or morning, everybody. It is Friday, January 16th, 2015. It's 2:58 a.m. here on the West Coast. Um, the week is ending tomorrow on the weekly candlesticks, so we'll go ahead and bring that up. It was a pretty volatile week. You can see that in the daily. Bring that up real quick. 1, 2, 3, 4, 5. That was last Friday. So it's been all down all week, and futures are down at the moment. Markets open up in about 3 hours and 30 minutes. 1978 is the lower end of Bollinger support range. That move by Swiss policymakers to decide not to suppress the value of the Swiss franc by not purchasing European bonds might have an effect on whether or not the market goes up or down tomorrow, or today I should say. It's not a good sign for the stimulus program the European Union has planned out to enact next week. Switzerland is basically saying we're not going to be purchasing bonds, which is kind of a big deal. It's Switzerland, so I mean the country is economically advanced, we shall say. So getting back to the daily here, that 1978 range, pairing that with the weekly on a 1 year basis. This 1944, I'd be looking for support in this 76 range to hold. If it doesn't, either something slightly lower and a head fake towards this lower Keltner, or a prices touch this lower Keltner range in the S&P. Bollinger Band, I'm thinking, would be touched on Monday. If we touch that lower Keltner today on Friday, it could get really ugly again. There's a lot of congestion in the daily. I'm gonna pull out a little bit longer time frame here, 8 months. As you can see, that megaphone pattern from prices topping here and then selling off and then rising back to do another topping pattern here it's pretty volatile. This is very volatile. Get all my lines set up for y'all. Support, 70, yeah. This is support right here. Right here. I really thought that we were going to get one of those classic set it and forget it bull rallies up until, maybe this Bollinger Band. But you know what? Apparently, all of this means something. And all of this means something. And this price action, after this much volatility, I don't think it would warrant higher prices at this point. Everyone's been calling for 2115, whatever. But as you can see, the high of last year was 2093.55. So, that's 6 ticks and 45, 6.45 ticks from 2100. So is that target reached is my question. And if that target is reached, the down target at that point would be on a longer time frame, something much more severe than just breaking this lower Bollinger Band at 1978. It's going to be very interesting watching to see how prices react and next week to the European banks, the European Central Bank's decision to or start of its stimulus program, which is interesting because the stimulus program, by definition and terminology, a stimulus sounds like it should be something for the economy, right? But I mean, they buy bonds and everything, but Switzerland is saying we're not going to be buying bonds anymore, and we're having our currency raised. So they have basically drawn a line in the sand at the 11th hour before this European central bank bond buying program starts next week. So just seeing whether or not they even do it or they cancel it, or I don't even know. Maybe they cancel it because you know what? Switzerland has a lot of money to spare, apparently, and they're not going to be using it to suppress the value of the franc by buying European bonds. But you know what? Maybe they'll change their tone. Maybe they'll end up buying some stuff. I want to take a look at the VIX real quick. The VIX is the fear gauge of the market. We touched that upper Bollinger Band on the VIX. Declined a little bit today. If tomorrow gets hairy, I would expect this action right here to start developing up here at 24, or move higher. There's not very many instances in the VIX where this type of formation is created. I was thinking it may have been something of a triple top, but this triple top up here, let me draw this trend on the VIX. It has a very different disbursement in candlesticks. Could get something like this right here if it is a triple top still. And we are at the April 10th, 2014 candlestick as far as price action goes. And then tomorrow we'll develop something like this candlestick, breaking above the Bollinger but closing below it, touching the highs there. Again, I don't think there's any surprises in the market. I always think there's some type of position to be taken or to be determined that the market's trying to get at. I don't think, like, Switzerland doesn't discuss anything with any of the rest of the world at all a week before the bond buying stimulus program starts and says we're not going to be buying the bonds. I don't think that happens by accident. I don't think, like, there's two Swiss policymakers determining everything, isolated from everyone, not telling anybody about possible decisions that could be made. But they made the decision. I mean, maybe it was planned to end this credit bonanza that has been going on for let's see here. Let's get out the monthly and get out the 16 years. So yeah, so for the past since 2009, really. Hmm. You know, this market is so strong, though. This has been such a strong bull run at this point. Even a 50% correction at this point would bring us only down to 1,000, and it would still have a rally at that point. I mean, a dead man's back, but lower Bollinger's at 1,500, 65%, and maybe we do a double bottom and then go all the way up for the next 10 years. See, 24 years. Whoops. You know, it would be hilarious though if the bear market only went down to about 1,500, this range right here, and then continued higher. That would be hilarious. And that's right where the lower Bollinger is too, and all this stuff is happening on an international scale. I like to think according to plan. I mean, I don't think the news is news. I think the news is presented as news, but I don't think the news is ever news. Really. Um, but, you know, that's just the way. It's not, I don't think it's paranoia necessarily. It's just more of a hypothesis at this point. I mean, they have meetings all the time. The G20s, Switzerland's there. All right, so back to the charts here. Yeah, this 60-minute on the 10 weeks looks like tomorrow may want to test that 1990 level. If that breaks 1974, if that breaks that 1950 range, and I believe on the daily, goes the lower Bollinger Band. No, that was 76. Where was that? Was it on the 2, 3 minutes? 1954. I think it was the trend line created by the megaphone pattern within the megaphone pattern that has been developing. So that would be here. I think it's going to be something more like this, though. Prices starting a megaphone up here. But as far as patterns go, that really doesn't take precedent over support, actual support averages, which the Bollinger Bands are composed of and the Keltners are composed of, and the actual SMA is the actual average. So for the 10-day. You can see a divergence in a negative divergence in the MACD. The signal line is still above the MACD, indicating a sell, but you can see the divergence is a lower divergence than the previous lower low of the divergence. But prices, let's see here. Wait, where is it? Oh, where is it? Where is it low? You know what? I have to take that back. I apologize. I was thinking that this divergence right here was over here more. It's a little late, and I'm having a hard time seeing. But yeah, so prices look like they can continue falling very drastically tomorrow for Friday. What did it look like on the monthly? Those Bollinger Bands are strong, though. They want them. They want to test down here. 1880 maybe. If prices collapse below that next week, that can happen so quick too. Like all of this. This would be like February would be like right here. 1508. And then the dead cat bounce to the broken trend line, and then I mean, if that bear market does develop this type of scenario, it will happen within 1 month. There will be one candle that just blah, and it'll be something like this, but it'll be red. Like that was pretty drastic. This candlestick, or is that October's of 2014? That was pretty hairy. As is right here, January 1st of '08. So yeah, we'll see if this year develops to be a lower year. Like in the '08 crash, it started. Excuse me. It started in November of '07, and then by June of '08, the market had already begun its its decline, getting ready to go all the way down. So, and this prior candlestick doesn't look anything nice either. This December's candlestick was bearish. I mean, that on the monthly as well, and it was a indecision candle that has now been is going to be tested tomorrow very drastically, right on the heels of this Swiss news. So we very well could be experiencing a new bear market start. There's a lot of consolidation within 3 months here, but I could be very wrong. This is only 2 months here. The consolidation period for this '08 crash was, let's see here, 1, 2, 3, 4, 5, 6, 7, 8. We'll just call it 8. And then 9 was the confirmation. But this whole range in '08 happened before. So 1, 2, 3, 4, 5, 6, 7, 8 months in that range. If you want to include these 9 months. But I don't, I'd rather just stick to that channel that developed and that price topping pattern during that time, and then focus on that, because I tried to do that here, but it said no. So we could get the same thing uh, in prior months, like it has been doing, where it's 1, 2, 3, and then the fourth is just nope. 1, 2, 3, nope. Oh, 1, 2, 3, nope. Well, this fifth too. This could have been it right here actually. It's 1, 2, 3, 4, 5. This was hairy. That could have been 5, 6, 7, 8, 9. That's it. Market done. People thought the market was done here, but it popped up again on November. And then so far, December and January have been bearish, but we'll see if that 1, 2, 3 monthly confirmation pattern is denied once again. But yeah, that's on the monthly. Getting back to a more of a practical analysis. This 2 days, let me get back to this 8 to 16 days. Yeah, so as you can see, when I went back to the daily, I want to get back to the 10 in a sec, but when I go to the daily, you can see that prices have been bouncing around a lot. And there's a lot of congestion in this area. Now, whether or not they were planning to move up or down, I don't know. But because of all this congestion in the news that's happening tomorrow, I really do think prices might touch this lower Bollinger Band, or at 76 at least. But because of all that congestion, and especially because this is a lower low and than this previous, lower high than this previous high, and this low is a higher low than our lower low that we currently have right now. So there's going to be a more of a determination and where prices go based on that, those factors in price discovery. It starts to form bearish patterns. So getting back to that 10 minute, let me go back to, what is it, 16 days. You can see prices really tried to come up from that range right here. Created at 1994. The actual low was 1992. A lot of that, I mean, that was support. I mean, we're finding it again right here as well. But the problem with this is that rally from the support area develops a lower high than where prices began before they started falling to this low created. So that developed this trend line, which was confirmed when prices broke the trend line that was developed. That's a sloppy trend line. Let me redo this. When prices broke this trend line, I mean, that was like the best case scenario there. It's sloppy too, but it developed the even lower low and confirmed that this was a lower low. And people waited to see if this rising trend line would be tagged again, this broken rising trend line, but prices developed another lower low and then went lower and got this low, but right back at the support level. Let's get that trend line going again. At that 1991 range. And the rally this time I mean, if it were to move higher, it has to exceed this 249 range. But that's a declining trend line, so it'll be a little bit lower. So tomorrow, I mean, so this range right here, this 246, 247 area. 245, 46, 47, 20, 45, 46, 47. So that's the upper end of that declining trend line there. But when prices do something like this, I don't think they're necessarily going to hold. Um, XIV right now is down a little bit from its previous close in pre-market. It's trading at 26.42. Um, mm, yeah, so right now I have my positions. I'll show you. I'm short XIV. Okay. Account management, my positions. Okay, so yeah. This is hard number to gauge because I'm in the box so often, so I have a lot of profit from this one in there. That's kind of incorrect, but whatever. But yeah, I'm in the box 150 UVXY and I'm long 100 XIV. Or excuse me, I'm short 100 XIV. Let me get this up so you can see it better. This is, I don't know why this is still here. This is something that I purchased like in 2006. Some speculative penny stock that didn't end up panning out and they never got rid of it on my account. It's there like a blemish on my account. It's just always going to be there. I can't get rid of it. I asked them to get rid of it. I sold these shares. I don't have these shares. So, whatever. Um, yeah, so that XIV short, I started at 26.66 when you include the trading cost. But I shorted at, I believe, 26.73. Mm. And anyway, so yeah, so long and short, 150 UVXY the box, XIV short, 100. Mm. Hmm. Right now, when I'm trading, I'll probably try to record it. Um, Sometimes I don't record while I trade just because it slows down my computer. I need all the speed I can when I'm watching these ticks, but um, I think I have some type of bot against me right now because my last two buys, I've had heavy bot action against me, which all that means is that there's some algorithm, uh, I guess designed to bring prices to a certain range when, uh, you know, prices are in a certain range, and I've been buying against the bots, unfortunately. The last one trade, my last trade, but it wasn't that big of a loss. It was only like 60 cents, so $60 on 100. Um, but the problem is, or actually one of the good things is that these bots, uh, they confirm and deny whether or not your position is correct or not. So, I mean, they're going to be buying against you no matter what. And that's the whole thing. And if you're going the wrong way, you're going to see that uh, a lot more quickly materialize than if you're going the wrong way, generally. It depends on market conditions. The more volatile market conditions are, the the quicker you're going to see a negative return on your position if you're going the wrong way with the bots. Um, but in a volatile market, that happens very quickly, so that'll go up and then down, and then up and down, and it'll happen really, really, really quick. And you have to make sure that you're aware of all your pivot points in your charts and price targets, and where you're going to be making your trade. So before you make a trade, you always want to make sure you know where you're going to get out and where you're going to get in. And it's standard issued safety features. XIV rising a little bit here. We'll see if this bond buying program was just a bear trap. We'll see. Who knows? And thanks for watching. Have a great night. Again, sorry for not posting some videos and my computer problems. This was a long video, and I'll be posting more daily. Thanks again.